The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeeze-a-please soft host. Once more, into the breach do we go, dear friends. And as always,
the following takes place between 2 p.m. and 3 p.m.
He's quick. He's quick on the draw today with that little dee, 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 dee. Anyway, very interesting day. We're watching a market go up slightly. Volume was very tepid before lunch. It's picked up a little bit, 2.5 billion shares. Let's call it 2.54 billion shares as we start the show today. So volume has picked up. We're up 6 points in the S&P cash. And what I'm looking for is shorts to quit shorting. I suspect that this market will roll over when that happens. We're fairly close. A lot of signals in the charts in the newsletter this morning, but that does not mean that you can't get a little bit of a move. When you get into these parabolic moves, there's a lot of greed that goes into those people that are long, and it doesn't matter. If you short, and they'll buy tomorrow, they can continue to move the market up. You know, is 6 points higher much to write home about? The answer is no. And we'll get into a little bit about what's going on in the markets. But if you're talking about any kind of metric, the market is as expensive or more expensive than it was in 2008. Put that in your pipe and smoke it, Mr. Vapor. Is that what they call them, vapors? I thought they were vaping, vapors. I don't know. I don't smoke either way, but I think it's vaping. But that would be it. Anyway, it's time to get started once again.
That it's all just a little bit of history repeating.
It is a little history on this day. Was this yesterday? I think this was yesterday. I missed that. We'll forget it. No history today. Or I forgot about it. Maybe we'll do history after the break. Maybe I forgot to update it. We'll go right on to Intel, INTC. Of course, they announced a fairly large layoff, and a lot of people are wondering what that actually means. When we look at the stock today and how it reacts, it's up 1.5%. 48 cents higher at 32.08. Volume, 42 million shares. We'll take a look at that in the charts in a little bit. But this is more of a house cleaning move, and that is a move to try to get into what they already do extremely well. The PC market is starting to pull off, and of course, their only single competitor in that market is AMD, and they're circling the drain. But it doesn't matter if a lot of people aren't buying PCs. The answer is that, I guess in the 80s, everybody said that you needed to write documents and you needed to have a spreadsheet and you needed to have a database. And, of course, the answer is most people don't need a database, don't need a spreadsheet, and write such letters so infrequently it does not matter. They've got the web now, and instead of writing a pithy letter to some company that you feel has offended you, you go on their website and click on their feedback. You don't need a word processor per se. People like me need all of those things, though. I use a spreadsheet almost every single day. I use Word for Microsoft almost every single day. I have my own database, although I don't use Access. I do write my own stuff. I do use a database every day. And I don't think the desktop is going away anytime soon for me or people at most businesses. But if you're at home and all you want to do is play Twitter or Grindr, my guess is that that's enough for you. You probably don't write anyway. And there's not a lot of pithy emails that you're going to send to your cable provider because your sports program wasn't on last night. You just cut the cord and that's it. So, we kind of went through that thing where you were supposed to have all your recipes on the computer and everything else. And for most people, it was a lot more work than it was worth it. And we've gone through that change now. But Intel may be better off getting rid of the non-performing businesses. Again, there's only 2 companies out there that make a piece of hardware that is consistently made in the 60% profit margin for, in Apple's case, they're coming on about 8 years. For Intel's case, maybe 25. But of course, they're going to focus a great deal on what we already know, which is on memory. We've talked at length about their new memory technology. And of course, making specialized products for data warehouses and cloud services. And of course, they bought Altera to put that kind of technology in their processor. They've got a lot of things that they're doing. They already own 98% of the server business. So it's not going to be like they're going to get a great deal more there. What they will do, though, is be able to sell a higher priced product to do more things. And those new processors will have the ability to be at least partially programmed. So when they go to Google hat in hand and say, hey, we're going to sell you all of your new chips for YouTube, they'll go, well, why would I want to do that? Well, we put a compression engine, decompression engine, literally in firmware on your current processor. So if you need to decrypt or encrypt new video that comes to you, in fact, I think, what was that I saw? It was 1,800 hours of new videos every single hour at YouTube. You can see where Intel is shifting it. They're shifting it to people that have lots of cash to spend and not so much focusing on those people buying $200 and $250 two-in-one laptops, although they're going to continue in that. They are taking at least about 4,000 people and moving them into yet another division, and that is the Internet of Things. That is going to be, of course, your thermostat, your any kind of little device. Maybe your washing machine will phone your phone when it's done with the cycle. When your clothes are dry, it'll call you. Basically, all this interconnectedness, the Internet of Things, is where they're going to be moving to, and high-end PCs where they make a ton of dough. But nowhere do they make the kind of cash that even Apple would worship. And that is the kind of cash that comes from selling Xenon processors to the big guys on the cloud services. And of course, the question is just where aren't they going to be able to use the new programmable Xenon chips as they put this together in Altera. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can post a message in the den. And we have somebody boycotting smart appliances. Yes, you shouldn't be, the machine that you're operating shouldn't be smarter than you, should it? And for the most part. What else do we have going on out here? BioMarin Pharmaceuticals, one of the big movers out here today. Let's check in on it right now. They had a couple of things that look like this thing is off to the races. It's up 4.3% today. It's actually much higher earlier, and one of the reasons I put it up here. It got to 92.81. It's off a little bit. The IBB really didn't look like it was following along too much. It's up 47 cents today. Just a lot of hang time in this market, and we continue to kind of look at that. We're at 21.08 to almost 21.09 on the S&P cash now, 2.63 billion shares. The problem is we need about 5 billion shares to signal that this thing's going to stick, and that is it. Anyway, two things going on with BioMarin. They wanted to get this thing up today for some reason. So the first thing they did was push out that they had a 1-2 clinical trial for a hemorrhagic aging therapy. So if you're the kind of person that gets a tiny cut and bleeds to death, they would be able to fix that. And, you know, I think, what was it, of 8 patients with severe problems, they treated it with therapy. All 6 of those treated with the highest dose improved from severe to either moderate, mild, or a normal range in effector levels based on the World Federation of Hemophilia criteria, the company said. So that was the first part of it. Really didn't move it, so they decided to throw some more stuff at the wall and see if it would stick. And they had even better news hiding in the wings. It seemed to be a little bit structured, but certainly very interesting for me because I never really understood what caused dwarfism. But apparently, that is what really moved this stock, and that was a push and some news out that they probably had gene therapy for the smallest among us, i.e. babies, that would cure dwarfism. And probably a fairly interesting idea if you can get that done. But two major things happening with BioMarin out here being pushed today. One's probably 2 years out. The other one's probably 3 years out. The hemophilia thing looked like it could be a drug. And because of the kind of problems that it creates, even with the current drugs it has now, you get in a car crash, you can die, that kind of stuff. And it may be one of these things, since it is a gene therapy product, that once you get done with it, you do not have to take it anymore. You are truly physically cured. And of course, we saw that in Hep C a couple of years ago. Everybody yelled and screamed. Normally, it took 15 people 15 years to die of it, or 20. And of course, they spent $650,000 taking those people to 15 years to death, and yelled and screamed when they could totally cure them for $90,000, and just thought it was too much. Maybe that's a question for somebody with a higher pay grade than me, but it seemed to me like you can either spend 90 now or 600,000 later. Maybe it's better to spend the 90 now. And I suspect that's what's going to be on BioMarin 2, and that is that all these gene therapy products are now really starting to come down the pike. We saw it first with the Hep C, and now we're seeing it with 2 new products from them, the hemophilia treatment and, of course, the dwarfism issue both. What else do we have out here? We were talking a little bit about it. How much time do I have left before we get into some charts? I got plenty of time. There's a couple of people that always want to talk me into being rather bullish when I start seeing warning signs. What I do know is that there are 2 things that you should be aware of. And as technical traders, for the most part, we don't spend a lot of time in fundamentals. In fact, a lot of people call them fundamentals. Probably the reason why is that, as one great sage said, and I can't remember who it was, all accounts or book accounts of businesses over the entire history of mankind has been those books being gently roasted or totally fried. So you know that there's always an issue, but we have 2 things. One, we have more than even in 2000 of stocks that are not using GAAP standards, that if they did use GAAP standards, earnings would be overall in the S&P 500 or in the larger ones like the Wilshire 2000 stocks, they would be 30% lower than they are today. And that's just if there was any truth to what was out there. We do have the highest PE since 2008 right now, even with the cooked books. And one other thing, of course, is that we have moved down earnings once again, and we've already seen many companies not able to meet those already. Now, there are a few out here. We'll look at Intel first when we come back from the break. But, so you got Yahoo up a little bit. Maybe you got Intel up 50 cents on a move. We're going to have a lot of earnings coming out. And the question is, what would it take to actually get to the all-time high in PEs? And that would be right now, without earnings, if we just looked forward to what the predictions were, that would put us at an all-time high for price-earning multiple. The market is going to be, over the next couple of weeks, the most expensive it has ever been for companies that actually had any kind of earnings. It's hard to tell what it was in 2000 because so many stocks had no earnings and no chance of ever having earnings. They were the beanie bear babies. But if you want to talk about the current crop of stocks that should be able to make profits of some kind. It's an incredibly expensive market out there. So what is the risk reward? The risk reward is maybe we go up 2% or down 10%. How about alumina? Earlier, what was it, yesterday? Down 45, 60 bucks. That is your thing. Yeah. Can we see a Yahoo go up on earnings $1.65? Yes. Can we see it go down $8 on earnings? And the answer is yes. So you can always give me a call at 877-927-6648. Tell me I'm all wet. Tell me why just suddenly all these earnings are going to come out when we know for the most part that we're probably looking at flat markets. Just a whole lot of cash with somewhere to go, and anybody's looking for anywhere to place it. And as one of the Eagles said, it's building the perfect beast. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And since somebody brought it up, I've been thinking about saying something about it for the last few days, and I keep forgetting. But there is a new movie coming out. You may have already seen the previews of it. It's called Money Monsters. It is a thinly veiled attempt to talk about Jim Cramer.
Bring me the head of the false prophet, Jim Cramer.
Anyway, it is thinly veiled, but it's exactly how many people do you know have a big show of their own on financial infotainment that basically tells everybody which stock is going higher or lower. And of course, a major target when the show on Comedy Central took him in the crosshairs many times over, especially after 2008. They kind of actually went after him a little bit. Well, this is going to be a whole hog barbecue of Kramer, and people are out to kill him in the movie and many other things. So it'll be kind of an interesting show when it comes out. I forgot to actually write down when it actually premieres, but they've been talking about this one in the trade magazines out in Hollywood for about 6 months. So it will be interesting for us traders out there. So let's get to ABB. That is, what else? A nice gap up in ABB Limited today. Actually starting to get some volume. There's a lot of these stocks that look like they're just fairly close to coming up and filling some of these gaps again. And this one, we go back to June 24th of 2015, where this gap down with about 2.1 million shares. And then you actually saw it move down all the way to 1574 on January 20th. It's moved back up fairly strongly. Actually, not some bad volume today. We are seeing some short covering in some of these stocks, and that is kind of what you're seeing in ABB. But again, just a little bit higher, you're going to be into a lot of people that want to get their cash back that have ridden this dog all the way down and back up. Adaptus Health, another one out here with some juice as it's going through its little level. This December 3rd high and the March 7th high in the upper 64s. Pretty good volume today. This is trying to hold up higher on more volume. It's having a little bit of problems. It's got to $67 today. You want to see this thing close above $64.70 and $65.33 if you go back to the December 3rd high. But again, just a little bit higher, and most of these will find some levels. Bluebird Bio is one of the stocks out here on the downside around the IBB, also with a little bit of volume. You've got two major lows at 37.40 and 38.12. You had more volume on the March 29th low. It also did not pierce the previous low. So you have a high volume, untested low. You have one that came in with higher volume. This thing did bounce with the market, but is now coming down. Today, 2.5 million shares are, so you're going to already exceed the March 29th low. So the question is whether or not it stops at that 38.12, more likely 37.40 as we go forward. And we'll go through as many as we can. Again, you can call me at 877-927-6648. You can email me at path@tfnn.com. And of course, you can post a message in the den. Let's see what else we have out here. Checkpoint systems. We've been talking about this one for a while. This one actually was the one I think we talked about last week as it got back up into this previous high, the December 2nd high, 87.98, about 8 million shares. Got into it with 2 million shares on the 31st of March, and was the last 3 days before this rolled out. You had 1.3 million shares, 1.7 million shares, and 2.5 million shares, and boom. That is it. So again, will you get probably a chance to short this thing? I think you can. A lot of these stocks are probably going to be making the same kind of thing. Get this back above the 9-day moving average and wait for the next move back under it, and you probably have a opportunity to see one or two of these gaps below. I'm going to say the gap at 80 on checkpoint systems. To the Canadian Pacific Railway, excuse me. I think I just had an aneurysm. This one actually into its previous high with a lot of volume, but seems to be having problems still the same. November 20th, 930,000 shares, $150, went to 97.09 on January 21st, went right back up. He had a nice, real big move from the 7th of April up to the April 13th high. This thing did pierce the previous high on much extended volume, actually 200% of the previous high. It went through it, pulled right back down to it, and now volume kind of going a little bit of sideways. Now, what you normally see, and what I want to try to get through to everybody today, is what I call being congruent. We had decent volume on November 20th. You had a huge high volume low, though, on January 21st that has been untested. You go all the way back up to the high, you get huge volume, but it can't hold the high. Now, the part that I think is missing is the in-between part, and that's where my power law vector indicator comes out. And that is, if you want to see the energy on the way down, of course, be less than the energy on the way up if you're expecting these things to break out. Energy was off about 25, let's call it 23% from that high to that low. We're back up pretty much to the same price point. Took just a little longer to get there. You had a few extra days out here that spiked it with a little bit more energy, but it's not congruent. It's not telling me the same thing between the highs and lows as it's telling me at the tops and the bottoms. And that's where a stock gets confusing, and it's tough to figure out which way you're going to flip the coin on this one. Is it a 50-50 bet? I don't like playing those. If this thing would have had, was say 450,000 shares at the high, it would have been what I call congruent. It would have been telling me the same thing at the highs, and it would have been telling me the same thing between the highs and back to this January, and from this January 21st low, which I did not see. What else do we have? Other stocks getting into their highs with huge volume. Callan Petroleum, CPE, this got right up to it. It's 4 cents short at the moment. November 24th, $10.18, 0.3 million shares. It got to within 4 cents today on 32 million shares, but not breaking that high. And again, this is one that actually is telling me and being congruent. The energy off that January 20th low far exceeded the energy off that November 24th high. We'll be back in just a sec.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year US dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And John from Clearwater says he wants to look at Microsoft. I just don't see a whole lot here right now. This thing's just kind of hanging out here at these highs. I mean, you have to really kind of dislike that this thing came up within a dime of the previous high, and the volume was 41 million shares on December 29th, which is a pretty quiet day, and did not match it on April 19th when we had, 29 million shares. So, you know, you kind of up. Now, again, we've talked about this a few times. This is one of these stocks that maybe has gone a little farther. I'm probably not going to short this stock, but again, energy on the way down from the December 29th to January 20th low had a lot of energy. We went about $1 lower to the February 8th low. The energy on this one has been kind of muted. You've had one kind of day that had big volume. That was about 67 million shares on the 18th of March. But since then, you really have had declining of volume, really, since we've gotten back into these two major lows from January 20th and February 8th. So, you know, did they come out with something even better or even better news or a new way to make a lot of cash quickly? I don't know, but it is problematic. We talked at the beginning of the show that we would look at INTC. We'd look at the at Intel. This thing's just kind of been going sideways here. Energy off the bottom was pretty good. Everybody wanted to buy it. It's gotten up into these 31 areas, and that's about it. I think a lot of people started to short it this morning, thought that the news of the layoffs was emblematic of prices going to sucketh in the near future. Let's see. I mean, their next scheduled earnings date is July 13th. So I don't know if that tells you a great deal. You've got some time out here before they come back on. But, you know, the volume up a little bit. I don't know. There's a lot of people shorting Intel more than usual. And that continues to be an issue. Let's take a quick look at Yahoo. I don't think you can make a whole lot of this. Most of the talk about Yahoo is, of course, that they are going to tear this stock apart and sell the pieces. And right now, the volume is saying that probably is not true. December 2nd, $36.39, 56 million shares. So are we getting anywhere to 56 million shares today? The answer is no. Energy was about the same on the way down as on the way up. I don't know if there's a great deal here with the idea that maybe any day someone could step forward and actually buy it. But I don't think we're basically what they're talking about is that the Alibaba portion of this is worth $30, and this thing is somewhere worth between $2 and $8 a share if they can dissolve this and get everybody out of this position. But pretty light volume so far out here today, and you don't like to see that going back in. But again, they've started the rumors. But I'm wondering if there is anybody willing to buy the whole thing at lock, stock, and barrel. The answer is probably no. I'm very skeptical. We talked about it maybe several years ago when Blackberry actually kept every week saying that they were going to sell their patents, which they never did. We talked about how their patents couldn't be sold. Then someone was going to buy them out. Then someone was going to tear them apart. Yahoo has still a lot of traffic, so it's not quite the declining revenue story that Blackberry was. They could go flat for a while. The story is more of a company that was mortally wounded, like the Titanic. Once, even if you had a new captain after it hit the iceberg, is there anything you can really do? And the answer was, we're going to buy a whole bunch of small companies, and hopefully one of them will be eBay. Hopefully one of them will be Periscope. And the answer is that none of them were. All of them got shuttered. They got rolled into Yahoo, and not one of them has made a difference yet. And that's about it. Other stocks of interest out here, let's go through a bunch of these before we get out here. Discover Financial Services, probably its best day in several years, gapped up. And, you got some fairly high volume out here, 7 million shares. Would like to see the candle a little bit, but certainly you're gapping through an existing gap out here. No test of the previous lows, so there was no real good clear signal to buy this thing. But a combination of a lot of people short and some good news is all it takes. Your next stop is 58.08, which is the November 20th high. As I said, a lot of these stocks look like they're getting awful close to running totally out of gas. EMC, of course, continues to push the whole Dell buyout thing. I've wondered if this thing is ever going to make it across the finish line. Maybe it does, maybe it doesn't. I knew it was never going to be anything easy. Both Dell and EMC have a couple of divisions they're trying to push out the door as, what can I say, as IPOs before it all happens. But that's it. Anyway, nice pop up here on EMC today, but no volume. And, does this thing get up to 26.89, maybe even a quarter above that April 4th high before this thing rolls over? And the answer, I think, is most of the stocks are doing it. Maybe making a island top today, and one that you want to watch very closely is Intuitive Surgical. It's 502.01 low from February 9th out here is showing just about everything you would expect. But again, huge pop. Volume should be expanding way over what it was yesterday. It is not. Your 562,000 shares right now. And I think that kind of tells you just how vulnerable some of these are out here. Does that mean that you'd pull the trigger right now? The answer is no. You either need to have a true shooting star, abandoned baby, something like that, or see this thing close back below its 9-day moving average. It only did it one day since or back through the 12th of February. So I suspect you're going to have a lot of very big and days in the next month as these things do correct eventually. The question is just when do they? KKD, nice little pop, filling its gap today. A lot of volume, $17.50 for the high. Of course, when you go back and look at it, this is when they had earnings on September 10th and rocketed down with an amazing 9 million shares. You're pretty much filling the gap out here with 2.5 million shares so far today. And, you got to think anybody wants to get their cash back that had bought at higher prices. up to $22.32. This is the day to get your cash back. In the meantime, sell when you can, not when you have to, and we'll see you tomorrow. Same bat channel, same bat time.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're at 2109 on the S&P cash, 2.9 billion shares. Of course, to break through these previous highs, you probably look at about 4.8 to 5.2, depending on how generous you want to be for the New York Stock Exchange consolidated tape. You may hear different volume numbers for overall markets. And occasionally you'll see a lower number quoted, and that is just the floor traded shares on the New York Stock Exchange. It is a big enough sample size that it's not going to be that different than the New York Stock Exchange consolidated tape. The consolidated tape is all shares traded off the New York Stock Exchange floor, including all ECNs and the American Stock Exchange also. You can think of it as every share traded anywhere in the world ever during that day, minus the NASDAQ, which is basically what it is. Anyway, well, we're at 2110 now, 2.92 billion shares. Maybe all the volume comes in at the end of the day, but looks to me probably about 3.8. So again, going to be light but it's not uncommon to see light volume hold up, maybe even into the 1st of May. We had that, I think, in 2011, where it went slightly higher. Why you did that? Of course, kind of an interesting move. The market is up a little higher. We've got the dollar index up 49 cents, 94.46 as we speak. And we're getting close to the end of this show. But it continues to be a market where we see some light volume hits up here on previous highs. Linear Technology, LLTC, the symbol, October 23rd, 6 million shares at $46.30. We did pierce it today with 3.6 million shares, so you want to watch that one as we go into the end of the day. Other big movers out here before we finish this show is LexMark. Like I said, there's a lot of people out here that were short going into these, and they're getting squeezed today. LexMark, of course, the printer manufacturer, going up against HP, mostly at the bottom end of the market. What you were trying to key off is this October 23rd high, $35.35, 2.3 million shares. Well, we got 19 million. And we're actually at the bottom of the candle when this thing fell apart last summer on July 21st. That came down on 9 million shares. So you pretty much have everything that you're looking for, although I would imagine at about 45 bucks, this thing is going to probably peter back out as it goes into this huge gap down and everybody starts getting their cash back on it. But looks pretty good. See if we have time for one more. Unipixel. This is these stocks that used to be a big high flyer on the penny side, actually getting through its October 9th low, or high, excuse me, $2.16, 1.2 million shares with 4.2 million shares today. There's a nice big fat gap between 390 and 590. And the question is whether even if you just got to 390, probably would be fairly decent out here. Going to watch this thing probably pull back a little bit, but I'm going to be watching this a little bit. They've got a couple of contracts that have been around that are being renewed, and they've won a few more of them. And of course, one of the stocks that a lot of people have loved to hate having a nice bounce out here too, that is VMware. Nice pop on this, 8.9 million shares today, and back in the trading range that it broke through from the October 21st low. So once again, so when you can, not when you have to, and we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.